Hello again, everyone. In this technical analysis of the stock market video, I call it midsummer calm because that's the feeling you get when you look at the market, the way the market's been acting, the VIX down in the doldrums, at least at the beginning of last week, and that may be changing. We're going to take a look at the Nasdaq Composite, check in on the VIX, look at the high yield bond fund, and see where gold is going. Okay. All right, so here's the Nasdaq Composite daily chart. You can see what it did on Friday, down 60.75 on Friday. This is the weekly view over here, 97.65 to the downside for the week. So look at this doji little candle right here. And what is this? This is July 15th. So that was Monday. Okay, so that was Monday. Very, very compressed. The trading range for the entire day was 28.5 points. You have to go back 4 months to find another day with that kind of compression. You look at this day, you say, no, 34.5 points, not 28.5. And you look back over here and say, well, this is pretty tight. Well, almost 35 points. So very, very tight, very compressed trading action. And then when we look at the VIX, literally the day before, on Friday, July 12th, look where the VIX closed. The VIX closed at 12.39, and that was the lowest close since back over here in April 23rd. So getting the doldrum type of activity at these lows in here for April, right before we exploded at the end of April into the beginning of May with the whole sell-off that occurred in May. So very, very interesting action on the VIX. And again, this is the daily view. This is a weekly view over here. And you look at, I'm going to get rid of the crosshairs for a minute. When you look at this trend line, we broke that on Thursday, but then it almost looked like it was a fake breakout. But then we resumed it on Friday, and we closed right on the high for the day on Friday. So definitely inverse. All the market indices closed on their lows on Friday, and the futures sold off another 8 to 9 points. Pretty negative action going into the close on Friday. We'll see what happens Sunday night into Monday morning. All right, so that's the picture here at the VIX. Let's go back to the Nasdaq. And so what do I think the Nasdaq's doing here on the Elliott wave picture? Let's go to the daily view. We're going to look at this count. I think that the Nasdaq is doing a very large flat picture for an intermediate wave 4. Now, if that's the case, then we're talking about a wave B in here, a 3-wave B. We had what looks like a 3-wave A, okay, as we came on down, and then a 3-wave B. And that implies, if we're doing a flat, that implies a 5-wave structure to the downside. Let's take a look at the weekly view. Here's a better picture. Let me get this so you can see where we're going, and do that like that. So why do I have this all the way down into this area? Well, because that takes us down into the previous wave 4 of one lower degree, okay? So that would take us down into the wave 4, minor wave 4 of intermediate wave 3. So we'll watch and see. Right now, I'm not going to be predicting we're going to a certain level. We're going to just take the wave count, one wave, 1 week at a time. And right now, it looks like we may be starting to roll over. But let me go back to the daily. Here's what I'm looking at when I look at the daily. I want to see this start to break down, just like it started to do back up here at the beginning of May. Got a couple closes below that blue, which is the 10 exponential moving average. And then next thing you know, we popped around a little bit for a couple of days. Then we got some continuous closes down. The moving averages crossed to the downside. And that was all she wrote for that move. So we do that again now, let's say the next week or so. And I think we're going to be off and running into that C wave to the downside. So we'll see what happens. In terms of the Nasdaq, we got a lot of earnings reports coming out this week. We got Alphabet, which is Google, Amazon, Tesla, Facebook, Starbucks, Twitter, PayPal, just on and on and on. But those are all reporting this coming week, so we'll see what happens. Apple reports a week from Tuesday. Yeah, a week from Tuesday, 30th of July. Okay, we looked at VIX, we looked at at the Nasdaq and compared that little top high here to the very low that we had reading on VIX. Here's the other thing I want to show. Look at the high yield bond fund. This is the daily view. Look what it's doing. Okay, it is basically signaling risk off, and the high over here was on the 20th, and we've done nothing but do this. Okay, that's the opposite direction of what the market's been doing. The market has been doing this. Okay, and the high yield bond fund has been going in the opposite direction. Okay, so and we've already gotten the moving average cross, the rollover on the high yield bond fund. So we'll watch and see now whether this is a precursor. Is this leading the market to the downside? I usually like to look for, with the high yield bond fund as just one of the clues that something else is happening. And I'm seeing things in several other areas also. And I talk about that daily with the insiders. All right, I want to take a look at gold this week. Okay, GLD. Gold's been pushing very, very nicely. Last time I talked about gold was in a video. I think it was on the 15th or the 14th of June, something like that. It was the 15th of June is when I put the video out. And then gold continued to explode to the upside in here. Okay, so this is what I think is happening with gold. Let me go to the weekly view and just keep it simpler. Okay, here's the weekly view. And then we'll zoom back out a little bit. And let me adjust that. Okay, so I think we're in a big counter trend. We had this big 5-wave move down, 2011 high into December 2015, right in here. And then we've gotten an A wave. We just had a B wave, a nice big triangle move sideways for over 2 years. And now we're in this C wave. So we've had a pretty good move. I do think we have much more to go. We closed where? 134.47 on Friday. Okay. I think C equals A in terms of this C wave equals the length of the A wave at 156. Okay. So that's just one indication, one measurement. I'm also comparing the B wave in terms of retracement of the big A wave. Okay. And that gets you up into this 147 to 163 zone, this big zone, which is right where the, that C equals A range is, okay, right up in here. Now, here's the other thing to take into consideration, though. Where, how many weeks have we already been in this C wave? Well, we've been in it for, let me zoom in. We've been in it for 1, 2, 4, 6, 8, 10, 11 weeks, okay? Well, when you go back over and look at the A wave, this was like 29 weeks. Now, there's no guarantee that the wave's going to be the exact same wavelength, time frame or whatever, but 11 weeks compared to 29 weeks, that tells me, we've got a lot more to go in terms of the length, most likely, and therefore that's why I think what's panning out, what's going to take place is a structure of 5 waves. Now, it may not be an impulse, it may be some kind of diagonal of some kind, but I'm going to put the wave, this impulse wave structure out here right now. So we'll watch and see just how much more of wave 1 do we get, and then we get a wave 2 pullback. But right now, that's the picture. I think we've got more to go over the coming months, and we'll just watch and see how the wave count unfolds. Okay, if you felt like the video was helpful, please hit the like button. And if you're not a subscriber, hit that subscriber button. And if you'd like to get more inside education, trade ideas on a regular basis, come on over, check it out, the membership at joehenches.net, and become an insider member. Beyond the Chart at joehenches.net. All right, everyone, have a great weekend. We'll talk to you on the next video.